Hello and welcome to the Bankers webinar, Connecting Through Technology in a Changing Dealmaking Landscape, sponsored by Affinity. I'm Marie Kemplay, the Bankers Investment Banking and Capital Markets Editor, and in this webinar, together with a panel of industry experts, we will be exploring how technology, such as customer relationship management software, or CRM as it's more often called, can give banks an edge when it comes to deal making in today's incredibly fast-paced environment. I'm pleased to be joined by a great panel for today's discussion, and I'm going to ask them all to quickly introduce themselves in turn. So firstly, Stefan.
Thanks, Maria. My name is Stefan Halman. I'm the CEO of IEG Investment Banking, which is a tech-focused boutique, globally active. I'm in charge of anything which is regulated tech, fintech, insurtech, health tech, and so forth. Regionally or geographically, I'm in charge of our Asian operations, mainly India and the Nordics.
Great, thanks, Stefan. Ronald, next to you, please.
Yes, hi, Marie. Thank you. My name is Ronald Jansen. I am the head of the Global Banking Data Lab here at UBS, which is essentially a group of digital innovators and data scientists that are working in the investment banking business, essentially on helping us transform from traditional to digital investment banking, if I say it in a few words.
And Lena, please can you introduce yourselves as well?
Thanks, Marie. Thanks for having me. Lena Maskrasnik here, Chief Data Officer and Managing Director at Moelis & Company. I developed and lead a new business function focused on data science and analytics, artificial intelligence, and machine learning in order to deliver differentiated content directly to our clients. I work across all of our different banking functions, which cover M&A, restructuring and recapitalization, private equity solutions, capital markets, and shareholder defense. We're a very commercially oriented team and spend a lot of time with our clients. And I also co-lead our CRM strategy and implementation, which is probably most relevant to the discussion today.
Great, thanks, Lena. And Michael as well, please.
Thanks again, Marie. My name is Michael Lamb. I'm the managing partner of Corporate Advisory Solutions. We're a boutique investment and merchant banking firm that specializes in tech-enabled outsourced business services companies. And we have three primary areas that we do all of our M&A work in: healthcare revenue cycle management, the call center, and receivables management areas.
Great. And last but certainly not least, Paul.
Thanks for hosting, Marie. Yeah, my name is Paul Ross. I am the head of marketing at Affinity. We are a relationship intelligence platform for deal makers with about 1,800 investment bank, venture capital, and private equity clients using primarily our CRM, which is obviously very relevant to our discussion today.
Great. Well, thanks so much, everyone, for those introductions. This webinar, of course, comes at a time of record-breaking deal-making activity. So, for example, recent data from Refinitiv found that worldwide M&A activity totaled $4.4 trillion during the first 3 quarters of this year. Now, this is both the highest total on record for an opening 9 months, and it also beats all previous full-year totals as well, just to give an indication of the wave of activity that we've seen. And there are a number of interesting factors driving this post-COVID boom in M&A, but particularly interesting given the topic of this webinar today is the growth in technology-related deals. And there, again, according to Refinitiv data, the number of technology-related deals was up by almost 50% year on year during the first 9 months of this year to reach a record high. So, to put that in context, I guess what we're seeing is, thriving M&A markets with a heavy technology focus. So in that context, how can investment banks ensure they have an edge and are really getting themselves into the heart of the action? Stefan, I'm going to turn to you first, as CEO of IEG Investment Banking Group, obviously a global boutique specializing in the technology sector. How have the last couple of years been for you, and how have you been trying to, set yourself apart from your competitors, including with any technological solutions?
Well, I think it's a good question because basically we benefited from a lot of different aspects during the last years, because after 20 years purely focused on tech, we probably were a niche player in 20 years ago. Today, if you look at the market, tech is not going away. It's a main driving factor. And if last time I spent some time with your CFO, John Riddick at Financial Times, he basically said, if I would have to rename the Financial Times, it would probably be the Technology Times. So I think that basically underlines the market is booming in tech. Corporates have understood that tech is a major function to their success. private equity is moving into that market massively, which probably most of you can confirm, which hasn't been that intensive over the last years. And also talent is more and more focusing on tech-related jobs, no matter where they come from. So having said this, that's a huge driver of our business. We just have to manage it properly, and that's where I think the edge comes in. It's like how in an imperfect tech market where information doesn't lie on the streets, as it used to be on capital markets, is how can you combine knowledge on personal individuals, which are important to you, their corporate and activities, their business activities, and across the global landscape. So putting that all together is probably where the edge comes in.
Michael, I'm going to turn to you now as well. I know in your business as well, you're focused a lot on technology companies too. How have the last couple of years been for you? And again, how have you been trying to maintain your edge, to keep using that phrase?
Yeah, no, it's very similar to Stefan. In our business, a lot of our clients have been migrating from just a traditional service model into technology. And so artificial intelligence has begun to really accelerate that process for many of our clients. And so it's really bringing more private equity and strategic buyers to the table on a global scale. A lot of our clients are headquartered either in the US or Canada, but they have offshore or nearshore capability in places like India and the Philippines. And as a result of the technology changes and COVID, that's been a big driver in changing these business models and making them much more profitable in the eyes of private equity and strategic buyers, which has been a good thing.
You paint a picture there of obviously a much more competitive marketplace emerging, new players coming in. How has it been for you to as I say, to kind of keep on top of in that space? Has your expertise in this area over a longer period of time set you in good stead there?
Yeah, for us, on a competitive basis, because we're very specialized, it certainly gives us an edge. But what we're always trying to do is think about leveraging what our clients are doing on the technology and data side to get smarter and more efficient and more profitable in how we're engaging inside of our workflows. And so, we try to get down to profitability metrics on all of our staff to try to understand where are we spending money and how are we spending our time. And that's really the name of the game when it comes to our world of investment banking.
Thanks, Michael. Lena, so Michael's raised a couple of interesting points there around, and he's mentioned kind of data and analytics. I know certainly in your role, this is something that you're looking at a lot, right? How has data and analytics kind of played a role for Moelis in keeping on top of this competitive market that we've been describing?
That's a great question. I think, one of the main things I would just draw kind of parallels to is, as we're talking about, the overarching theme of CRM, it's really driven by relationships. And I don't think anyone would disagree that investment banking, certainly as we find at Moelis, which is an independent advisory based firm, that, those relationships matter. And how do you actually kind of track that, but then complement that with technology? So from a data science and analytics standpoint, we actually are grounded on 3 key pillars as I lead our data science and analytics initiative. As we think about it as a team, in particular, the first 2 are very commercially oriented. And I think that ties in with what both Stefan and Michael have said as far as, from a technology perspective, we're looking to leverage artificial intelligence, particularly machine learning, as it relates to predictive power, to take that unique differentiated content to our clients. So we interface with them very regularly. The first pillar is really focused on engaging directly with our banking teams and with our clients in terms of how do you actually bring some of this machine learning capability to bear that can actually get at client targeting, can get at behavioral finance and analytics, kind of personalization at scale for our B2C clients in particular, or just customization at scale, if you will, and kind of hyper customization at scale for the B2B clients. The second pillar is much more focused on what I call strategic business intelligence projects. So that's where we're working with teams like some of our M&A coverage teams, ranging from consumer retail around predictive machine learning value and output to help kind of pitch to clients, show them that differentiated content versus something that's more longer term, or kind of, I should say medium term, in terms of analytical capabilities together with, let's say, our PE solutions team. And I think, Stefan alluded to growth there. We've certainly seen an uptick in terms of technology adoption by our PE sponsor firm clients, but also our interaction with them in terms of how we can bring unique differentiated content to bear, leveraging some data science analytics capabilities has been really interesting and fascinating as we think about behavioral finance. And then the third pillar, and this goes to Michael's point about kind of thinking about through workflow, maybe robotic process automation, more of the how do you create better digitized processes to create efficiencies and cost improvements. That's certainly kind of workflow automation piece is our third pillar. And that relates to, junior banker talent, especially as now we're all living through this great resignation period. How can you make some of that junior banker workflow, much more streamlined, more efficient, so that they can focus on, other tasks or client engagement opportunities? And so I think those are the three key pillars as we see them. As far as the secret weapon, I think everyone probably would agree, technology is endemic. It's really how do you use it? And as you pointed out, how do you create that competitive edge by leveraging the capabilities that you have, with the tool set, with the talent that you have, kind of available to you in terms of building out those types of capabilities and teams.
Thanks. And there's clearly a number of really powerful different initiatives that you're working on there, and as we've kind of set in context for this discussion, we've obviously had this really booming period of activity, right? Obviously off the back of the pandemic, which in and of itself was a pretty disruptive period of time too, still is in a number of respects. How has that kind of affected the pace of what you've been doing in these different areas that you've set out?
So it certainly led to, increased acceleration, I would say, around certain business areas. Obviously, M&A activity has been, kind of on an uptick. I would say at the beginning of COVID, actually, we saw a lot of activity in our restructuring and recapitalization business. So from our standpoint on a data science analytics front, we were looking at things like liquidity risk assessment, right? Every CFO last year was concerned with their, kind of liquidity. We were able to develop some interesting models working together with that specific kind of banking team. And then as things shifted, you start to see this pickup in acceleration, obviously in M&A activity, which is kind of verging to where we are today, but also PE activity in terms of our sponsor business. And so we've tended to focus quite extensively on, M&A. We have about 15 or so different coverage groups ranging from oil and gas, which are now really kind of looking at, let's say, ESG capabilities. So how do you bring on some of these different types of data sets and different capabilities in terms of structured versus unstructured data, as well as alternative data, to be able to provide that, again, unique differentiated content to clients. And then you take something like consumer retail, a very different animal as far as what they're looking for, right? But the ability to do some predictive work around future revenue flows for specific client segments is really interesting, really fascinating. And so, to the extent you can leverage data science and analytics capabilities and machine learning to be able to apply those types of output has been really fascinating. I think on the PE front in particular, we've seen not only incredible deal flow, particularly this year, but also the interest in those clients around better understanding data, a lot more data due diligence by some of our larger strategic buyers, even in M&A transactions, in terms of wanting to understand proprietary models that their targets have available and actually doing due diligence on the underlying data. And so, it really is a kind of broad spectrum there of, everything in terms of what some of the firms themselves are capable of as far as technology, what the due diligence processes involve from an investment process standpoint, and then what are we able to bring to bear in some of those different contexts around M&A, PE, restructuring, even capital market solutions, as that's been a kind of heavy hitting, accelerated momentum area as well over the last year and a half or two.
No, sure. Thanks, Lena. And Ron, in the context of your role at UBS, a number of our panelists now have raised a number of interesting areas in the context of innovating and having that competitive edge, around AI, automation of workflows, and the power of data and analytics. I imagine these are all different things that you could speak to in terms of your role at UBS and what you've been looking at.
Yeah, that's right. I think you started out with saying how the M&A market is booming and how, especially in technology, it's booming. And with our seat in investment banks, we have an incredible view into what's going on in the technology space overall. And things been mentioned before. The challenge for us is to ask ourselves, how can we utilize those technologies in our own internal operations, right? There's a tremendous amount of opportunities. And I think it really requires that institutions who want to be leaders in the space, that they have teams of people that aren't afraid to basically transcend the boundaries. We have in banking, you have a pattern where you have a lot of experienced people in advisory, capital markets, etc. They have an incredible work ethic, but they don't necessarily have a lot of interchange with people who are data scientists, technology engineers, digital innovators. And it's really important that you kind of mix up this culture and bring in different people. And when you can create this sort of environment where you have, for example, data scientists working alongside experienced deal makers, that's when really interesting things can happen and innovation can occur. And that's what we're doing. It's really innovation is a very funny process. It's not like you can go into a conference room and say, let's have a great idea, and then we're going to finish this meeting in 30 minutes. The best ideas sort of, they emerge out of the right environment or almost by chance. But when you see it, you can capture it, and then you have to have the ability to act on it, right?
It's very interesting what you're saying there, because often if we're talking about having a competitive edge, we maybe think about in terms of speed or efficiency or in that kind of sense. But what you're talking around actually is about the importance of this technology in creating a more engaging and better environment for staff. So they're motivated to work harder. It's an important piece of the puzzle, isn't it?
Yeah, I think it was mentioned here before, the experience of junior bankers that are dealing with this environment where they're working extremely long hours. And by the way, those junior bankers, they're people who, through their own personal experience, through what they learn when they go to school, they actually come to work for us with a significant understanding of new technologies. A lot of young investment bankers actually probably, when they went to university, learned how to code. And in a lot of institutions, and then they're brought in and they're asked to do rather mundane things, which is to prepare PowerPoint presentations and other kinds of things, and that frustrates them enormously. There's a huge, opportunity to change that and not only make the work experience for these people much more interesting, but also utilize that to our advantage. And as was mentioned before, deliver much better outcomes for our clients.
Thanks, Ron. And Paul, let's hear from you. You're obviously coming at this from a kind of slightly different perspective as a vendor of technology. And yeah, how is what you've heard so far kind of tally with your experiences in how your clients are seeking to use the kind of technology that you offer in that competitive deal making landscape?
Well, I think a lot of this is just very much in line with what we see. I think that the key differences is when we look across the entire kind of customer base, prospective users of our product and our capabilities, we do see a slightly different picture than being described here. Primarily because this is a group of very smart people doing very innovative things who are providing themselves a competitive edge against the rest of the market. So what we do definitively see is we see a huge increase in the number of mandates and potential deals being worked. We're well up over 240 deals or prospective deals being tracked in our system per customer in investment banking right now. Like, just give you a scale of, the sense of the scale of people who are involved in there. So we're definitely seeing that. The second thing though is that when we look at what are people doing today to address that in the face of this huge volume of work that's out there and available, majority of people are still using very rudimentary technology capabilities. Like 40% plus of the people we speak to in investment banking are using Excel as their primary data storage for each deal that they're doing. Ron will talk about the junior banker experience. Like the associates at many firms are still spending lots of time capturing information out of Excel spreadsheets and email and all of these other places. So what we're seeing is the type, like the people in this call, who are becoming more innovative and pushing this forward, of becoming much more strategic in how they're using their data to drive something that Lena said very specifically, which was the relationships and how does that work through. And I know that that's something that both Michael and Stefan have been very focused on in terms of competitive differentiation, both from securing mandates, but then in terms of deal making as well. And that's something that we're seeing more and more of. But it is a situation where we're still very much in investment banking relying upon a good chunk of the market being not where these guys are today, but a lot of hope of that continuation of change.
So just to really summarize, what you're saying is actually some of this is much more basic and rudimentary, looking at your processes, and there are some really quick wins there if people want them, so.
Absolutely, absolutely, and I think that like the guys in the call can talk to like the difference some of this stuff can make. There's still very important strategic things like Lena and Stefan we're talking about too, but there is definitely some real improvements that we can take into account. The challenge I think is that if the deals are raining, it's hard to make any transitional changes. Where's your motivation today? And I think that's what we're faced a little bit by.
We can't talk around, technological innovation, and if we're thinking in the context of introducing advanced CRM technologies, without thinking about, the investment that's necessary in order to achieve that. Lena, you very nicely laid out a number of different pillars of activity that your firm is working through. But talk to me around the investment that's been necessary in those technologies, including perhaps, your CRM systems. Has that been significant? Has it paid off? And was that something that came quickly, or did you have to have a bit of a faith in the long term payoff?
No, that's a great question. I mean, I think, for us and for many firms, right, you kind of think through the cost effectiveness of what you're trying to achieve, and also about the culture and the nature of the institution in which you're trying to actually push for a strategic implementation. Because I think, at least what we found, is that there is no kind of dearth of technology. It's really more around the change management piece of CRM at the end of the day. And so when we were thinking through investment at the early end of this, it was really, do we bring in consultants and actually try to understand, what that change management process might look like in terms of the key business use case objectives. And that's always been our North Star, which is what are the key business use cases that we're trying to achieve as far as objectives, and have that drive what type of technology platform we would leverage. The firm did have an existing CRM prior to my joining, but what we wanted to focus on was what are some of the medium and longer term potential outputs that we can generate leveraging data science analytics if we have a high volume of incoming data that we could curate. And so if our goals are to achieve, certain types of client targeting and business development analytics, what types of inputs are necessary for that? What type of data model is required, and what can support that with a UX that is actually, something that's engaging enough and dynamic enough that bankers will want to use it? And the number one question they always ask is, what's in it for me? The issue is you have to actually get them to input the data and curate it prior to actually getting to show what some of that benefit is. So we focused very much on, how can we kind of complement the system itself, the platform, with some of those outputs. In particular, how can we actually demonstrate what the true exponential benefit is from a kind of client targeting tool, if you will, when individual bankers are able to kind of curate that data over time and incorporate it at scale. And so from an investment standpoint, kind of going back to your original question, Marie, I think what we really focused on was doing that due diligence up front, understanding what bankers really wanted, iterating extensively with our internal teams at kind of a senior level, and then more mid-level as well, and then really focused on building out in a phased approach different modules that were very important to specific business banking use cases. So we didn't kind of come in and say, okay, we have this platform, we're just going to completely change the system and expect everyone to use it. There wasn't a mandated approach, but rather how can we phase in or roll out multiple modules that are actually able to achieve things around relationships, things around interactions, and other kind of components that enable us to achieve our end goals there.
That's really clear. It's not just the investment in the technology itself, as you say. It's investing both the time and I guess the money as well in those kind of wider systems and then cultural changes as well. Stefan, interested to hear from you in your organization. How have your experiences with CRM been in terms of investing in it? Has it paid off in terms of boosted business? Have you seen other benefits? Talk us through that.
Well, see, we probably wouldn't call it a data strategy. We started 10 years ago almost, where we called it knowledge management in our firm. So it was really firm centric, because the 100 bankers, approximately 1,000 companies, which we interface, I'm just really saying interface digitally with. And one pillar was really affinity at the end of the day, because we could connect all the relationships and put really some flavor to that. So that was really important. But when it really comes down where we're still struggling, and it's a trial and error every day, is actually 3 points. A, we decided we don't want to change the people who work for us, their workflow. That doesn't work. we tried that so many times with rules, standards whatsoever. They should put their data where they want to. They should do it in whatever format. We don't want to hassle them with that. So the system has to find a solution for that. Second problem was that we couldn't interface properly, basically APIs. All the APIs which we wanted, we couldn't get. Whether it was WeChat, whether it's social media on LinkedIn, which locked it down at some point almost 5 years ago, which was highly relevant for us, and particularly also of the age of the employees which were in our firm, because they wouldn't use a PIM or a normal Microsoft product or whatsoever. So last but not least, we struggle with structured data, because how do we get structured data? And in a decentralized fashion. And I think those three issues and challenges we're working on a daily basis to optimize incrementally, every day a little step. Lena was saying they use machine learning whatsoever. We tried that, but our database for that wasn't really sufficient. So we kind of stopped all that fancy stuff, and I don't want to be disrespectful, but we basically focused on how do we get APIs under control in a scalable manner, and B, how do we get structured data out of our organization without really letting our people suffer in a daily workflow. So that's a huge investment in terms of time, frustration, and capital, because we've been trying a lot of products which weren't really accepted. And again, the only thing which really works was Affinity, because it was open on both sides of the equation. We can connect that with the Slack or the MS Teams, the communication platforms. We could connect it with any decentralized server system which we wanted to deploy. Why? Because the Asians won't work with the server systems the Europeans work with. Once there is a US data pin or a server pin.